All right, Rory, well, I appreciate you taking a little time out of your busy day. I enjoyed actually listening to you on a panel earlier. It's always a pleasure to talk to you. We got a chance to chat a little bit Monday night as well. I always take advantage.
More than a little bit.
More than a little bit.
We were actually hanging out for a while.
Absolutely, and just getting a little bit of additional exposure and experience to your side of the industry, I think is critical. It's not my background, but just hearing you talk about it, I can tell how much passion you have behind it.
Thank you.
And it's been really cool to kind of see you take the reins and really head up this entire digital asset management. So we'll get into that a little bit, but before we do that, I want to talk a little bit more about your background of kind of how you started out and how that becomes applicable with CleanSpark, of course.
Yeah.
So, from what I had researched a little bit, you spent about 8 years, on a trading desk with the investment team there at Discovery Capital. Part of that was focused on some of the global macro as well as some of the emerging market strategies. Maybe if you can just give me, a couple of minutes, some color in your time there. What were some of, the biggest takeaways, or what if there's maybe one or two things that occurred during that time period that you've really kind of centered around and that you've kind of brought that forward into your current career here at CleanSpark? I'd love to hear about that.
Yeah, of course. And again, I just always want to say, thank you for having me. We really appreciate, again, what we always want is fair, coverage, good coverage, and diligent coverage. And so we appreciate that you're willing to engage with us both directly, do your own independent research, kind of hold our feet to the fire where they need to be held to the fire, but also kind of engage in fairly and honestly and with you. So it's really a pleasure as I've gotten to do that with you and gotten to get to know you a little bit. And it was really nice to hang out the other night. So there are so many lessons from my time at Discovery. I mean, it was really one of those just transformational time. It was an unbelievable place to spend the first kind of almost decade of my career. If you count the time I was an intern as well, it was 9 years, not quite 10, but it was closer to a decade than not. So it's kind of how I think about it as an era. I guess where I would start is maybe just with an anecdote, because sometimes those can be kind of descriptive of a whole bunch of different stuff. So, obviously I was kind of fresh off of my finance degree at American University. I was a non-target school, so I kind of got in through the back door at Discovery. I started as an intern on the trading desk. Got very, very fortunate to be there. It was just kind of right time, right place. They were in the middle of kind of implementing this new technology process with trading. I got there right at the tail end where they were still stamping paper tickets, which if you ask any kind of trader, they'll remember those little machines, and you stick it in, it goes, and it kind of gives it a timestamp, and somebody's got to run it and kind of put it into the system, and they're parallelizing the systems and doing this whole thing. So they just needed a young kid that had nothing better to do to kind of come help them. But I walked in after that, and I had all this kind of textbook knowledge that we'd studied early on, and so I went to our FXEM portfolio manager, and I said to him, I said, I was an enterprising young guy. I knew that I didn't want to be stamping paper tickets forever. Eventually wanted to kind of move on to maybe trading and maybe even kind of getting some names in the book. So I said to him, I said, hey, I ran this analysis, and I went and I looked at, and I don't remember exactly which currency it was, but let's call it the Chilean peso, just for argument's sake. So I looked at local rates in the Chilean market. I looked at where the Chilean peso forwards are trading. I priced that out against US interest rates. And what I realized is that according to interest rate parity, you could make a 1% kind of riskless arbitrage here. And he immediately burst out laughing. And he said, how could you make, he said, yeah, you're gonna make what? I said, interest rate parity. He said, yeah. The last time I did anything based on interest rate parity was the day that I walked out of my degree, right? And so I think that was it was a front row seat to the immediate kind of, and he's an absolutely unbelievable person. Charlie, we're still friends. He's had me up to his place upstate, and we became, deep friends for a long time. He was a mentor, right? But that was kind of my very first lesson. And the lesson is not that textbooks don't matter. It's that markets are non-stationary, dynamic. They don't function according to mathematical rules. They function according to psychological rules, flows, liquidity, positioning, sentiment, politics, regulatory structures. All of these are the things that can blow up because, yeah, maybe you can make your 1% kind of interest rate parity return in the Chilean peso, but what happens if you get a major kind of unexpected change in interest rates in both countries? What happens if the regulatory regime turns against you? What happens if the political regime becomes confiscatory and they put on capital controls? What happens if all these different things happen? And so that's the kind of level of analysis that I learned to think about the world in. And I just learned a real difference between the textbooks and the reality. And so I'll kind of stop there, but I think it's emblematic of kind of the entire kind of arc of experiences that I had at Discovery.
Awesome. And yeah, obviously spending almost a decade with a company, you're going to learn a lot, and those types of experiences you're going to kind of carry forward. I want to kind of move past your time there and talk a little bit. I thought it was interesting kind of learning that you actually completed a coding boot camp and did a little bit of P2P, some swap exchanges. So maybe give me another minute or so on that. How was that experience?
Yeah, so I caught the Bitcoin bug pretty early on. Not as early as maybe Satoshi, but around 2013, I was living in the East Village with a couple of roommates like you do, early in my career, and one of my friends was in tech, and they never really got super into it, but he came home one day and he said, "Oh, have you heard about this kind of new P2P money thing? I think, you're into markets and politics and geopolitics and sociology and technology. Like, have you heard about this?" I said, I'd never not heard about it at all. So I started doing some research, and like a lot of young men, I considered myself kind of a Benjamin Graham kind of value investor. Was looking for, as they say, cigarette butts, or cigars, not cigarettes, excuse me, cigars that were trading for cigar butt prices, and I was really skeptical. And it was, that's always kind of been my forte, and that's kind of quite frankly what I try to bring to CleanSpark is, conservative, risk-managed approach even to this kind of nascent new technology area. But I left in 2019 because the adoption by TradFi just was not at the pace that my interest was kind of blossoming. So I left. I did a coding boot camp. I knew that I wanted to be in Bitcoin, and I'm not a Bitcoin maximalist per se. I'm most drawn to Bitcoin. It's always been philosophically and ideologically kind of the thing that's most interesting to me. So I ended up working at this kind of P2P exchange. It was a total startup. We were building essentially atomic swaps between Bitcoin. It was RBTC, which was an early version of kind of like a Bitcoin sidechain. Never really took off as much. Liquid has kind of a similar sidechain. It's gotten some traction over the years, but that never really took off as much. I'd say over time, kind of WBTC, TBTC, some of these other kind of wrap Bitcoin protocols kind of took off more. But we're building kind of atomic swaps. We're trying to essentially bridge the gap between having a central limit order book and the ability to do atomic swaps between Ethereum and wrap Bitcoin. That didn't go too far. Learned a lot of lessons on kind of technology, startups, distributed teams, kind of resources, kind of all that kind of thing. Ended up going to a different startup, working on capital markets on Ethereum for a couple years, kind of with the same idea that I was always ultimately interested in Bitcoin, but it was a nice kind of way to get exposure to coding, working in Solidity, working in smart contracts, understanding kind of blockchains at a high level, protocol dynamics at a specific level. I was responsible for a lot of kind of in that kind of early kind of DeFi summer 2021 kind of time. I was responsible for a lot of the kind of early like DAO governance stuff that we were doing. I was always just fascinated with how people organize themselves in this new nascent space. Ultimately ended up leaving that because, again, my passion was always in Bitcoin. Got recruited by a gentleman named Harry Studok, who I think you interviewed earlier this week. We ended up at Grid. And kind of that's that historically. But, I think that's allowed me to bring to CleanSpark a very deep understanding of protocols and protocol dynamics, a very deep understanding of kind of what it means to achieve rough consensus. I think it helps our team, like, we're not sitting there necessarily evaluating every BIP every day, but we understand that Bitcoin we are passionate about Bitcoin because it's a decentralized, permissionless monetary network. And so, yes, we're a publicly traded company, and we kind of have we're SEC regulated, and we're audited by, kind of a name brand global kind of global national auditor, but we consider ourselves Bitcoiners at heart. And so I think that allowed me to kind of really understand what the protocol level looks like, what the node dynamics look like, what node runners are like, and be able to engage with that segment of stakeholders in a way that is respectful, appreciative, and quite frankly, that's what this whole project is built on, is that grassroots kind of movement. So unless and until we have an appreciation for that, I don't think we can do our jobs properly.
The amount of passion and the amount of time that you spent early on with Bitcoin is pretty remarkable. Obviously, prior to that, working with the different hedge fund companies, working, obviously having a CFA background as well. How did you combat maybe some of the early doubters in Bitcoin? Did you see a lot of resistance to that, kind of early on? And what was it that kind of really centered you and anchored you to that belief that Bitcoin was going to have kind of a long-term price appreciation, and that it was really going to become more and more adopted over time?
Yeah, I mean, like I said, I was a doubter at first. I really wanted to poke holes in it. And I've heard this story a lot from kind of Bitcoiners. They said, okay, I have this idea. I see this crazy technology, and I got this crazy buddy, and he says this interesting thing. And obviously I'm passionate about markets and all this, but I said, oh, it'll never work because of this, and it's going to break down because of that, and the banks are going to attack it, and the politicians are going to attack it, and nobody's going to adopt it, and it's got no intrinsic value. And I'd be lying to you if I said that you could ever fully satisfy those questions to the degree that somebody who's committed to staying a doubter is ever going to be over that hump. But eventually you kind of just have to give credit where it's due. And the game theory behind what I learned, the code that I reviewed myself, the experts that I talked to, the meetups that I went to, the passionate people involved in the space, the kind of Lindy qualities over several cycles, eventually you kind of just go, okay, it's working, and it keeps working. And all of our criticisms have been proven to be wrong on some level. I don't really try to fight people on it. I've never been one to argue at the Thanksgiving dinner table with my family about it, because I just go, hey, I think it's really interesting. I'm really passionate about it. What I would say is now, particularly in the last couple of years, it's a multi-trillion dollar, trillion and a half to 2 trillion, kind of depending on where we are in the cycle. I think it's going higher than that. But there's trillions of dollars of value in this protocol. It's in hundreds of thousands, if not millions of portfolios. It's backing hundreds of millions of dollars, if not billions of dollars. It's actually billions of dollars of financial products. I was at a Bitcoin-backed lending event yesterday, and we were talking about how Bitcoin-backed lending is about a $70 billion market right now. There's a real kind of clear path to 10xing that if you kind of just kind of comp it to some other ABS kind of comparables. But the point being, that's still $70 billion, and the idea is that small. So, I don't really fight people. My whole view has always been, and my whole take has always been, hey, of course there's risk. Of course we don't know the future. I don't know the future of fiat. I've studied a lot of fiat currencies. They've all trended towards zero over time under the conditions that we have currently in the world. This is a global, neutral, permissionless monetary alternative. The technology has withstood the test of time. I've never been one to say, hey, go put 100% of your portfolio. If you need to put pay for your kids' college, I don't know, Ernie, 1, 5, 10, sure, that's a reasonable allocation. I'm a little bit higher, but I have a higher risk tolerance and more belief. But I'm not here to argue with people about it. I'm here to say, hey, I hear your concerns. I think that X, Y, and Z have been talked about. Here's the Here's the great kind of Vijay Boyapati article that I read. Here's this great kind of 3 blue, 1 brown video that I watched. Here's this great conversation I went to. Here's BitDevs, which I attended. And here are your concerns, but Bitcoin is not new either. Bitcoin's a teenager. It's 16 years old. It just got its driver's license in Oregon, at least where I grew up, which looking back, we got our driver's licenses at 16, and I'm not so sure that was exactly the right age. But it's a teenager. It's going to, and so it's not just some new thing, right? Bitcoin is older than Uber, Airbnb, DoorDash, right? All these kind of name brand companies that we think of as staples of the United States economy. It's been around longer than them, and maybe it's within a year or two. I want to make sure I check the Wikipedia after this to fact check myself. But let's just call it within horseshoes and hand grenades of kind of the foundings of those companies. So, I don't fight people. I say, hey, this is how I think about the world. This is what I studied. This is how I've been involved. This is how my journey is kind of consummated. And if you want to get to know it, I would love to. You set up your wallet. I'll send you a couple sats, and we'll do a P2P transaction that nobody else in the world has to be a party to. And I think that's really cool.
Well, obviously.
Sorry, I just rambled.
No,
totally rambled.
No, you're good. I was going to say, obviously, at this point in time, for any of the listeners, they should understand that you're very passionate about Bitcoin and you see the value proposition that it has. And that kind of gets me to this next section, which is really how you're able to stand up a digital asset management department basically from the ground up. We talk about the crawl, walk, run stages, and you were there from the inception of it all. So, I'd love to maybe tap into that a little bit more. Obviously, you guys have already started scaling it to the point where you guys are doing multiple types of derivative options. You're also looking at some spot plus. There's so many different opportunities and ways to be able to kind of put that HODL to work, and then also looking even just at some of the monthly planned sales. You're able to actually get a little bit higher. You talked about that at one of the last panel discussions you're on, but basically, why settle for just a spot price when you could potentially get slightly higher and get a little extra
more
revenue?
And isn't that the name of the game? Yeah, look, it has been the honor, opportunity, and work of my life to date, my career to date, to do this. I am eternally grateful to our board of directors, which gave us the, risk, assessed and presented to them, but ultimately sign off in order to pursue this. To Matt Schultz, our CEO and executive chairman, who, same thing, was kind of an early believer, and not just a believer, but a supporter, and was always going to make sure to be there to kind of serve as that foil and make sure that the business plan that we present makes sense, that the risk kind of tolerances that we have fit within the business. And Gary Vecchiarelli, our CFO and now president, who was the real internal champion of this for a long time before I even got here, but ultimately let me and what has ultimately become my and our team kind of build this thing from the ground up. Sorry, you were going to say?
Oh, well, just talking about that, when you think about Bitcoin, you think about mining, they say, hey, you can just take your miner, you can plug it in the wall, you're already hashing, you're starting to collect some sats if you're in a pool.
That's what we thought 6 years ago, and it turns out it's not true. Yeah.
Well, but then the simplicity of it is there, but then when you add in what you're bringing to the table, you're not just dealing with selling to the market directly. There's so many small nuances that you have to become experts at and continue to kind of learn as it does evolve over time. So I'm talking about a little bit of you being able to secure some of the ISDAs, also the KYC processes, also having to deal with all the different counterparties and all those discussions that had to take place really before you could even launch the digital asset management desk there at CleanSpark. It was quite an undertaking, at least just from an outsider's perspective, to kind of see what all went in, the amount of work and effort that you had to actually put into this to get it kind of launched. So maybe give me a couple minutes or however much time you could allot me on just like how was that kind of to building it up from scratch there.
I could talk about it all day. I think you set it up perfectly. I think it's again kind of the anecdote for me is everybody said, oh, what did you do as an institutional trader at Discovery? And it's like, okay, well, you think about, you go to your Schwab account and you say you want to buy some Apple. Well, that's easy. I go buy 1 or 100 shares of Apple. You want to buy $100 million of Apple, you need an institutional trader, trading desk, counterparty risk frameworks, ISDA agreements, trade ops infrastructure, integrated books and records, like all of this kind of stuff that goes into that. Not to mention, and that's before you even get to the trade execution process, right? Okay, and good. You want to buy $100 million of Apple. Maybe Apple's a bad example. It trades a couple $1 billion, $100 billion a day, but we traded Israeli equities, Turkish lira options. I think we were one of the largest we had one of the largest books in Turkish lira options back in 2013 at one point in time. Shout out Gene Lee, who was very forthright and kind of like a trend that has continued, quite frankly, for a long time. Traded South African interest rate swaps. So yeah, once you get into all of that kind of stuff, you need to have more of a thoughtful approach to actual execution. But before you can even get there, and this is what I didn't appreciate at Discovery, was all of the infrastructure that had been built out around me and us in order to do that. And so yeah, when we got here and it was like, okay, let's design this philosophy around what we do. Let's make sure that it fits our ethos as an organization, right? Because we talked about board, kind of management. So it has to map onto the culture of the organization, the organizational and operating structure, and the risk tolerances and strategic guidance of management, right? So you got to do that. Then once you have that, then the real work starts. And that was something that I appreciate much, much, much more now. I read there's the 1999 ISDA preprint, there's the 2002 ISDA preprint, there's the commodity definitions, there's the FX definitions, there's what is these new digital asset definitions. I took it incumbent upon me to read every single word of those documents and understand them at a very core level, because I did not want to bring to our organization and recommendation to do something that had risk in a corner that I had not explored. And so we really, but beyond that, it wasn't just me reading it, obviously. Then we go to our lawyers and we have great internal and external counsel. We really negotiated these contracts in a way that we talked about with our counterparties, and our counterparties said to us, hey, they actually, I'm not gonna say we played hardball, because that's not our style. We don't play hardball, but we are firm and specific in what our risk tolerances are and our expectations are. And we do that, and they actually said, hey, and I said to them sometimes, hey, I'm getting used to kind of this negotiation process, and no, we love it, because if you're diligencing us like this, that means you're diligencing all of your other counterparties like this. That means that you're thinking in a way, because it's a two-way street when you're trading with these guys.
Yeah.
They have some of our Bitcoin, we have some of their Bitcoin, they have some of our dollars, we have some of their dollars. We both are, depending on what side you are and when, you're committing to making good on a contractual agreement to exchange dollars, Bitcoin, whatever it is. So they were like, this is great. Like you guys are one of the most diligent in the space in your approach. And what ended up happening is that it took us, if you remember, there was a lot of criticism because we started talking about this digital asset management strategy, and then a quarter went by and we said, okay, we're still working on it. And then another quarter went by and people are going, hey, you're saying all these big words, you're talking about this. But the reason was because we were not gonna push play until we had our T's crossed, our I's dotted, our legal kind of structures in place, and we were ready to really transact at this institutional scale. So we take and Gary will say this, and I've kind of adopted this, and I really appreciate it, but it's a belt and suspenders approach and a 360-degree view to everything we do. Accounting, finance, tax, legal, internal controls, compliance, and then we get to operations. And then we get to strategy and the money, right? So all of those boxes have to, one, the business case has to be there. It has to, like we talked about, it has to make sense strategically. Then it has to go through our entire internal process from a risk, legal, compliance, et cetera process. And then we have to actually do the implementation. So it was an unbelievable learning opportunity for me. I'm very glad I'm not the only person doing it anymore, and we have a great team kind of under us now, kind of helping us. Not under us. Let me make sure to emphasize and just re-emphasize partners in what we do. Everybody I work with is a partner because we can't do it without them. So I always say that as I kind of have had the opportunity to hire some people to work with me, say, hey, I'm not the general manager. I'm the team captain, right? We're all on the field together. We're running wind sprints together. We're up at 5 a.m. on Saturdays together. We're fighting back to back together. But this is really about working as a team. We're on the field, okay? Now Gary, let's give him credit. He's our Vince Lombardi, all right? And he's also got his hands dirty, don't get me wrong. But he can be the coach and all of that. But we're out there hustling, right? And so it's been a real pleasure to get to work with people that really are passionate about that as well.
Yeah, I was going to talk a little bit about the stewardship with the capital, but I mean, you basically just took that question and ran with it and painted it so beautifully. I kind of want to move on a little bit further, and maybe for an investor that's kind of new to CleanSpark and digital asset management, maybe just give a quick highlight of once you guys actually kicked it off, what was, how did you guys celebrate that first quarter, kind of seeing some amount of revenue come in, and then the following quarter, and again, just for everyone who may not know, what all is involved, what are the different types of mechanisms? You know, we've got the call options with different miners and different things of that nature. Quite a bit of it, anything that's really related to Bitcoin and how additional profitability can kind of go into that. I feel that it's all part of that digital asset management. So I'd like to maybe hear your thoughts, and maybe if share with me some of your key highlights already.
Yeah, totally. So the first quarter was very slow. It was the crawl and the crawl, walk, run. I'd say we're walking. We're definitely walking. We're not running, but we're jogging at this point in time.
Yeah.
But we were not going to do anything until I'm going to be very honest. We had a thesis, right? We had a thesis about the market, and obviously we do our models and we do our back tests to a certain degree, but until you engage with the market, you don't know if it's going to work, right? You don't know what you're going to get. That real market pricing, that people give you an indication and this and that and whatever, but you know how it is, Ernie, until you go out in the world and you engage. You're an engineer, okay? Yeah. You can run all of your CAD models and your this and that as you want. Once you go from material science to applied materials, that's a different world, right? And so it was very, we went pretty slow. I think we did around like $1 million in premium the first month. It was kind of the same the first couple months. What was nice is we had this supplier option that was a sort of, it's part of, and I've talked about this, that it's part of the great work that kind of our operations and technology team and procurement team has done. They had this really great terms with this, with the ASIC acquisition. As part of that, we got this supplier option that essentially allowed us to purchase the ASICs in Bitcoin and get a free call option as a part of that to buy that back. So that was fortunate to land on the digital asset management desk. I didn't do it. I had nothing to do with kind of negotiating that, but we were sort of responsible for managing that. We monetized that at what turned out to be a very attractive point during that quarter. And it was very nerve-wracking for me because I basically said to the team, I said, hey, we're here to hedge risk, not take risk. We're at a point where this option is holding a ton of value, but we could monetize, we could say, hey, if you go into you go to options theory pricing, essentially, options theory pricing says it is essentially never optimal to exercise an option before expiry. Now, I don't know where those guys came up with that, because that's just not how we see it in the market, and that's my interest rate parity, which is that we know that there are cycles to these things. We know that there are ups and downs, and so, but we might have monetized it at what turned out to be a moment when maybe we could have gotten a little bit more juice out of it, a little bit more return. But we said, hey, this is an excellent time. We think that things are kind of very robust right now. Let's take that bird in the hand. It ended up being about $7 million total. Let's take that bird in the hand, put that onto our balance sheet, and use that as more kind of seed capital into the digital asset management strategy. So that helped us with our first quarter to have like some very kind of good kind of top line performance. But we talked about it very transparently in the market. We don't expect that to be that was a one-off, and then we weren't kind of guiding to an expectation of that over time. Our second quarter was, we started to get more comfortable. We started to increase kind of the total size that we are allocating. And I say Bitcoin at risk, but want to very much emphasize that it's risk managed. We're taking kind of low delta exposures. We've even started to get more active really in the last quarter because of all the volatility in the market, of saying, hey, we're really making sure that if we ever get to a point where we are at all uncomfortable with the amount of risk on our book, we would rather, and this is quite frankly going back to one of the main core lessons that I learned at Discovery, is take a small loss, not a big loss.
Absolutely.
Okay? Right? Okay? And the most important thing is, if you believe in your philosophy, strategy, team, implementation, the opportunity set's going to come back. You never trade on tilt. You never try to trade out of you never try to trade out of a position. The very first thing you do when you get uncomfortable, cut it immediately. Cut it. You don't get fired for having some variability in your return stream. You get fired if you do not manage risk and you get stuck in a position that you shouldn't be in. Okay? That is number one. Number two, number three, keep going, right?
Yeah.
Okay. So we've gotten a little bit more active, just saying, hey, if we are ever, when we start to say, hey, maybe we should take down some risk, we cut risk. Then we reassess the book. Then we sit on our hands. Then we sit on our hands again. And until we have had a fulsome discussion, run our models, talk with the IC, then we'll maybe re-engage in the market, right? But second quarter was a lot more fulsome. We started to kind of increase the exposure. Started to get more comfortable with validating, because we said, hey, what we had philosophically, what we saw in our textbooks, is what we're getting in the market. So that tells us that we can kind of continue to increase that exposure and do what we're going to do. And then the quarter after that, there's definitely going to be more variability in that return stream, just because last quarter was such a kind of a tough quarter for Bitcoin, a lot of volatility and variability. But what we also saw was, again, that the book performed how we expected it to. And so we're not surprised by any of the performance. I think that we have continued to learn some lessons and enact those lessons that we already knew, I guess, but we've seen them kind of had an opportunity to enact them in the wild. And you can always kind of tighten up your response here, tighten up your monitoring there, titrate your kind of signals and all that kind of stuff. So we're going through that process. But really starting to feel comfortable that the philosophy we have is being seen in the market. So I don't know if I answered your question or if I just talked about a whole bunch of other stuff, but
absolutely, you answered them. I mean, I was going to talk to you a little bit about how you guys kind of mitigate some of the risks, but I mean, you heavily emphasized, your stance on that, and you basically look to minimize risk anywhere that that you see fit. And
we are never going to put ourselves in a position where there is anything that smells or rhymes. Forget existential risk, but just material risk, right? We're just not going to do it. And so that's how we do it. And I know you asked about instruments. Here's the thing I always want to emphasize. What we do is simple. It is not easy, right? And this is always what I've said. Hey, we're using the same primitives as everybody else. Covered calls, we can buy and sell puts. We actually tend to find that writing puts is more attractive than buying puts, because when puts are most rich is when the market is most bid for them. So the market's very scared. And the way that we get comfortable with that is, I said, like, great, we've now done 2-3 quarters. This is our fourth quarter of operating the strategy. That means that we've done X millions of dollars of premium. That X millions of dollars of premium, I'm not going to pretend it's found money, but it's money that we're very comfortable saying, hey, now we've systematically sold Bitcoin higher through these covered call strategies. Let's systematically buy Bitcoin lower by writing some puts out with that cash that we've generated. So, we've talked about strategies. There's also decomposing it. When we look at Bitcoin-backed lines of credit, some other credit facilities, we might put a collar on that because what we want to do is, one, if you collar it, you can show your counterparty exactly what their payoff profile is going to be. You show them that there's zero repayment risk. And so that's where it might make sense to pay a little bit more for insurance because the interest rate will be able to come down. So net it comes out, and also you don't take risk on the balance sheet. But with this other bucket of capital that we have, which is the premiums we've generated, we say, hey, that can be allocated to some slightly higher risk strategies because we want to be long Bitcoin. We sold a lot of Bitcoin in the 100Ks plus. We've bought some Bitcoin back in the 60s, 70s. Like, you're going to get some variability in the mark to market of how that looks on a balance sheet kind of at any one point in time. But philosophically, that's what we want to be doing over a cycle, right?
Yeah. Now, one thing I found interesting was, obviously once it's completely at that run phase, Gary kind of threw out some of the KPIs, how we can kind of look at overall ideas on percent yield versus what you guys are going to be utilizing. I can't recall, correct me if these numbers are wrong, but it was somewhere around, I think 4% yield on an annual basis, and you guys were going to use a certain amount. I don't remember if it was 30% of the stack or a certain amount of the stack at your disposal. And when I say disposal, I'm talking about some of the monthly operational sales, and that's an interesting part of this cycle now, and I think that gives some additional optionality. So because you guys are at the stage now where instead of looking at an ATM or a dilutive type of way to kind of generate revenue, you guys are doing it through Bitcoin sales.
We haven't sold a share of CleanSpark stock via an ATM since November of 2024, right? It's April, it's the end of April 2026. We are again, fact check me, but I am pretty darn confident that we are the only one in this industry that can say that, right? Now let me take it a little bit further.
Yeah.
Not only have we not sold a single share since November of 2024, we have reduced our float by 20%. Now that made sense for us, and we always do what's right for the shareholder, what's right for the balance sheet, what's right for the income statement, what's right for our stakeholders, what's right for our shareholders. That made sense as part of kind of our convertible transactions, neutralizing some of that kind of short risk. Nobody wants more shorts. We said, hey, rather than short our stock, we're going to bet on ourselves here. Why don't we buy that back from you? And not only are we going to reduce our float, we're going to own more kind of CleanSpark stock in the treasury, kind of off of the treasury stock, and we're going to bet on ourselves. But the point being that how do we assess ourselves kind of in general? I think one is exactly that, which is that the whole point of digital asset management is to increase the total profitability of the business. We're not here to be some internal hedge fund. We're here to operate in a way that makes the Bitcoin mining side maximally profitable, that drives cash flows to the financing side for the AI HPC expansion, that ultimately serves the entire kind of flywheel of our business. So our targets are, and here's what I would emphasize. These are sort of internal targets that we have settled on as the North Stars for what we're guiding to. Any one day, like I emphasized, if we think that vol has compressed to a point where we would have to chase risk in order to hit that target, we're more concerned about the total return of the strategy than we are hitting any one thing. So, and let me explain how that works. So we've decomposed it across 3 different metrics. The first metric and the most important is cash on cash returns, right? Now it's, for us, we think in sats on sats returns, but we're talking to Wall Street here, so we use cash on cash, dirty fiat, I get it, but at the end of the day, that's kind of, that's how we're paying our salaries, insurance, electricity bills, and it's how we're assessed in the market. So cash on cash returns. The most important thing is at the end of the quarter, at the end of the year, is the total asset line of our balance sheet going up or down. We want to make sure that digital asset management is helping that go up, right? So total cash, right? The second piece is split between return on Bitcoin at risk, and what that drives is return on total HODL. So we target, it's a round number, we say target about 10% return on Bitcoin at risk. We've allocated 40% of our total HODL to the total Bitcoin that we can put at risk at any one time. 10% times 0.4 equals 4%. So we target around a 4% return on our kind of total BTC HODL.
Yeah.
And then the last metric is we also benchmark ourselves and say, hey, we're generating these returns, we're able to hit these numbers because we're able to take kind of higher risk than average on our spot sales. Because we have that Bitcoin coming in every month, we're able to go higher delta options, which means more risk, but it means you're going to get taken out of that at some point in time. So it's not risky for us because we want to sell it.
Right.
It's more risk in the traditional sense of a higher delta option, but it's not business risk for us. It's not operational risk for us. It's not return risk for us. But we still want to say, hey, hypothetically, and you would never really do this, but hypothetically, if we came in on the first of the month at 12 o'clock UTC and we hit a VWAP button on the spot sales and we ended at 11:59:59 UTC on the last day of the month, what's that VWAP? And so what we compare is our average sales price from the month, if you include our total premiums generated, versus what that VWAP is. And we haven't said we target any specific number on that. It's tended to be about a 2 to 7% uplift to VWAP. I don't want to make a prognostication or kind of a forecast.
Yeah.
That's sort of where we've seen it throughout the last couple quarters. I think that could go up or down, but essentially we just want to make sure that while we're generating these returns in these other ways, we're not robbing Peter to pay Paul and leaving money on the table in this other way. So that's kind of how we think about it.
And I think it's really interesting that even during a little bit of this downturn, right, we were seeing Bitcoin up above 120,000. It's pulled back. It went down as low as I think it maybe even hit 59K or something like that.
We didn't quite get to 58K, gang, but we got close.
Very close.
Yeah.
I mean, now we're obviously seeing a little bit more of an increase and a little bit of a lift. We're back to around 75-ish, give or take, depending on the second, right? But
yeah, darn Fed meeting today. We were at 77 this morning. I think we're at 75,683 last time I walked in, but who's counting?
Yeah. So I think I bring it up because I've seen some of the other industry leaders in the mining group. They had to basically, because of the whole bear market situation and what they're looking at to kind of shift their business, they had to take an approach of just selling that Bitcoin, at market. Some of them actually raised convertibles in order to purchase some of that Bitcoin. I don't want to say any names out there.
You're asking me a tough question here.
I know I am.
It's not tough for me, it's tough for them, but I'm not sure I really want to address this. But yes, you're absolutely right. You're absolutely right.
Yeah, we can leave it at that, but I mean, I think...
No, and I kid because, look, bring the tough questions, and again, it's not a tough question for us, but... yeah, there's been some questionable decisions, I think, from a capital allocation perspective that others have made. I think we saw a real hype cycle towards the end of last year.
Yeah.
Where we saw a lot of people raising convertible notes and using them to sort of, we think, I don't want to say thoughtlessly, but I would say a lack of true kind of thoughtfulness. Even if you want to buy Bitcoin, how are you going to do it? Are you going to DCA in? Are you going to do it a little bit over time? Are you going to use some market-based signals? Nobody can predict the price of Bitcoin, but you can use a blend of on-chain analytics, market sentiment, positioning, volume, a whole bunch of different stuff to get a sense of where you are. Again, you don't know exactly what's going to happen on a 1 day, 1 month, 1 week, 1 month basis, but you can get an idea of where you are. And instead, I think we saw people really, oh my goodness, I think we saw people really chase a hype cycle.
Yeah.
And I think that was really capital destructive. And we raised a convertible and we've put a couple $100 million of cash on. The first thing we did was pay down our debt.
Yep.
Second thing we did was put a couple $100 million of cash on the balance sheet, and we've used that to really seed this expansion into high ROIC opportunities in the AI HPC market. And use D.A.M as a way to continue to drive kind of Bitcoin denominated returns that way. So I don't know what the question is, but it's hard because we take capital stewardship, rigor, diligence, transparency, and integrity so seriously. And that's not saying that these other counterparties don't, but it certainly feels like there was a little bit of a hype train at that point in time.
Yeah, absolutely.
And I think it leaves a little bit of a bad taste in the mouth of people when they see people who are supposed to be capital stewards not doing what I think could have been a little bit of a better job at times.
Yeah, I mean, my outlook, my thoughts on that is it seemed like there was some companies that were really trying to chase the valuation of a DAT at that point in time because, like you said, there was just this massive hype as the price kept appreciating, and some companies got the bid, and you saw that on the share price, but others, they tried it, and
they did for a bit. They did for a bit.
Didn't change them permanently. So I think that's interesting. I don't want to go down that rabbit trail because I want to kind of focus in on...
No, but let's just double click on that for a second. CleanSpark has never chased a hype cycle in our lives. We've consistently grown counter-cyclically and in a contrarian way over several cycles. We talked about what's the philosophy of digital asset management. The entire thing that we tried to do was design a philosophy which mapped onto our counter-cyclical and contrarian DNA. They did an amazing job of selling Bitcoin at the top of last cycle and starting to rehydrate that HODL at the bottom of the one after. Now that's really hard to get right consistently every single time. So what we've done is we've designed a system that allows you to, like we talked about, systematically sell high, systematically buy low, take advantage of that volatility throughout the cycle. And so and look, it's been really tough. We see it, we see the criticism. We try to be as forward with it and address it as much as possible. But at the end of the day, we communicate with the market. We have a monthly update. We do these sit downs. We talk on stage. We sponsor events. We have our quarterly reporting. We publish to the market what our strategy is. And at the end of the day, we can't respond minute to minute to the kind of constant comments and criticisms to every single one, because we are heads down building what we believe is a durable, sustainable business over not just this next cycle, but the cycle to come and the cycle to come. We want to be totally out front with our shareholders, and we take every single shareholder from 1 to 100 to hundreds of thousands or millions with the exact same care and seriousness. But also at a certain point, all we can do is say, hey, here's our strategy, here's our history, here's our update, here's where we're at, here's been the results, here's where we're going, and we are not going to be happy until we have won together. And that's kind of our philosophy. So it's hard because when you are counter-cyclical, you're sort of always a little bit out of favor with what the market narrative is.
Right.
But it's how we went from plugging our first mining machine in December 2020 to being 5%, it goes up and down with difficulty a little bit, but roughly 5% of global network hash rate. It's how we've turned, we've identified some of these premier sites as AI HPC kind of interest, and the interest that we've gotten from some serious kind of that we've seen in the market. It's how we've built this digital asset management strategy to both make money in an absolute sense individually and feed the business. And it's why we want to be out front in front of everybody and just tell them, hey, this is what we want to do. At a certain point, you have to trust in us, but we mean this. We didn't trip, fall, and land here. It's our mission, it's our passion, it's our culture, it's what we believe in. And, until we succeed, we won't be happy, but we are never gonna stop getting up early and going to bed late until we achieve our goals.
That was well said. And I had some other questions. I wanted to pick your brain on some similarities on the Trade 5 versus the D5, but you know what? We'll save that for another conversation. I
think this was great. I really appreciate the opportunity.
Absolutely. Thanks so much, Rory. And looking forward to continuing to collaborate and speak with you again in the near future.
Appreciate it.
Thanks, man.